So I think we're good to go. Hello, everyone. The Global Ventures once again. My name is Alibek Sultangazin, and today we're having VC talk on how to raise investment from global VC. And for this purpose, we have engaged our dear partner from Domino Ventures, Yagiz Karadeniz from Istanbul, Turkey. He's the managing partner of Domino Ventures. Yagiz has a huge experience in VCs, and he held leadership in Tarvan Ventures and Tech One VC, and he has deep knowledge in both technology and finance, have processed 70 plus investment rounds in more than 50 tech startups. So most of the things today that we will be covering are how to approach and raise funds from global investors, why post-investment support is an important as capital, how top VCs spot trends and identifying emerging opportunities. But these are not the only topics. Knowing Yagiz for some time, I know that he likes to improvise a lot, and it depends on the inspiration that he's having at this very moment. Yagiz, I'm happy to have you here. Hello.
Hello, Alibek. How are you doing? Everything is well? Thank you for support,
Everything
by
is
the
well.
way. Yeah,
Thank
we
you
have
so
been
much.
talking like 1 month about this, and today also morning we talked. Thank you for all support. How is going on your side? How is weather there?
Weather is okay,
Super.
a little bit chilly, but I think soon is going to be much warmer, both weather and VC market as well.
Super, super. When I come to Astana, I love it summer. So when it's like January, February, it's pretty cold, and also in December and November, it's pretty cold.
Extreme, pretty extreme.
Yeah.
We'll be having you
Thank you.
soon in June. You'll come to CVF and
Yeah, I
we'll
will.
talk more.
I will definitely.
By the way, dear audience, we'll be having Yagiz on our basic VC course soon, so stay tuned on our social media platforms. We'll announce it later
Super.
this May, I guess. Please, Yagiz, the floor is yours.
Thank you. Hello, guys. It is Yagiz. I am the managing partner of Domino Ventures. I have been in VC business for 7.5 years. So it's been 2 years, 2.5 years we established Domino. Before Domino Ventures, we have managed different funds in Turkey. We invested more than before Domino Ventures. At the past funds, we invested more than generally 55 investment, and have 4 exits. We invested more than 30 million US dollar to the startups before Domino Ventures. So thanks to its good numbers, we decided to be more global. That's why we created our fund in Netherlands. So now Domino is investing early and seed stage startups in Central Asia, Turkey, and Eastern Europe, and also Caucasus in the region. So we invest generally 3 rounds. We do particularly investments. At the first rounds, we invest up to 300. Then at the second round, we invest up to 500. And at the third round, we invest up to 1 million. So this particularly investment strategies supports emerging market startups, because generally in emerging market, when you look at the emerging market investors, so they're huge gap after 10 million US dollar, after 15 million US dollar valuation. There are huge gaps. So that's why we should support our portfolio companies. That's why 20% of our investments are allocated to first rounds, but 80% of, capital in our fund allocated to follow-on rounds. Then we invest low, then we increase our capital share and also investments in the startups. So as I mentioned, we invest with 5 startups at the past times. So that experience coming from that past story of us. We were always huge team. Now in Domino, we are 15 people working in Domino Ventures. So our game changer thing is, from my opinion, to manage that fund with crowded team, because in emerging markets, the startups need, yes, capital first. When you see the capital in the table, so we will talk about the education. When you see the capital in the table, you will take it. But if you want to be a successful VC, if you want to do good exits, you have to support your portfolio without just, with money, yeah, you will support, but without, money, you should support your portfolio with when you do intros to the customers, when you do intro to the global VCs. So in our fund, we always do that. Always, every week, maybe in 2 weeks, we talk with the founders. Every month we follow them, we talk with them, we have reports from them. Every time in our approach, even when you make new connections in the global VC and developed market VC area, we always talk about the emerging markets, and this is our strategy because we need more global VC in the region, also in Central Asia and the Caucasus. Before 1.5 years ago, we were not investing in the Central Asia, but then we realized that the Central Asia market will be booming in next 5 years, 10 years. There will be new startups. There are pretty good talent. The engineering base of the Kazakhstan, Uzbekistan, and in Central Asia is great. So we see the huge potential and the growth in the founders. Always when we talk with the founders, I quickly realize that they're all global mindsets. They have all global mindset. They have all, great plans for the next years. They all know the growth. They created their company in US and the developed markets. They know how to play that game, because in early stage, this is like the you have to play that game very well. So in the next slides, I will talk about it a little bit, because every time when I talk with the Central Asian founder, they talk with the, okay, we should do some POCs in Kazakhstan, in Central Asia, but the real market and the real, the changes come from the developed market customers. So the Kazakhstan based and the Central Asia based startups should earn customers from developed market sites. So that's why also we see that potential, and that we invested in that market in the region. So generally, this is our team. We have some venture fellows in the region. So we have 8 offices in the region to create the presence. Also now we opened the London office. Generally, some of them is normal offices. Some of them is we work with some teams, but generally we are trying to create some presence there in that countries. So this is pretty important. I guess this is why we investing in emerging markets. After pandemic, everything is changed in the market. When we look at the market, we see that in Central Asia and emerging markets, and also we are having that same situation in Eastern Europe and Turkey. Same with the comparing of the global startups or the developed market startups in UK based startups, the global VC, and generally when we look at that 2 startup, same team, same obstacles, same market, but at the same stage, the developed market startups raise more money with more valuation. So it's like, now the time passing through the emerging markets, because we know that there are good talent and the price and performance talent always. So the OPEX is low in the market, but the generally the products are getting great, and the founders are getting educated, the VCs are getting educated. So that's why after pandemic, too much also global VC turned their head to the emerging markets, Central Asia, and next 5 years, 10 years, we will see that growth more. So in our investment strategy, I will be a little bit quick about, because they have limited time, but if the startup is planning to be local 1 year, we never invest. Before Domino, we did some, operational operational business investments. But now we don't invest in any operational business. We always focus pure digital, high tech, and the first tech global businesses. In our every investment, we look that if that product can earn global customer, if that founder also pretty important. Founder profile is pretty important in our fund. So yeah, we screen too much startups. That's why also we are a crowded team. We talk with we are trying to see more startups, because just maybe in a year, in a month, we do 1.5 investment in a year. So it's like pretty important to see too much startups in our plan. Some of the slides I'm getting ahead. So this is pretty important, because normally if in the audition, if the some guys know me, I'm too open and too direct guys. Normally, I see that good founder don't need accelerator. Best founder, don't need accelerator. This is my opinion. But to create some impact, to connect the global site and to the Central Asia, we wanted to do better feature acceleration program, and it went well. Now we are doing it for the in Uzbekistan, and 2-3 times we are doing that also, that better feature acceleration program, fully global mentors, fully free. As a VC, we never care about the shares. It is fully, we never do valuation stabilization kind of like this. So from the just Central Asian founders in that program, 8 weeks, and the startups just educated from the global mentors. And this is pretty important. End of the demo day, we show them to the developed market global VCs. So this is pretty important. We are really friendly with local VCs. Also, we invite local VCs because we need that. But in the region, there are low global VC, but we have to increase that list. So that's why, as Domino, we are trying to get more global VC in the region. After that program, for example, now one of our, I won't mention the name because it's newly closing, from one Uzbek startup is raising money because we connected him to the global VCs. Now he's raising $1.5 million. Also, we are investing to that startup. So our aim is to attract more global money to the region because also we need that. We need more co-investors. So also with locals, we co-invest, but also we should co-invest with the global VCs because every global VC will bring experience, expertise, more money, more support, more being ecosystem builder to the region. So that's why, as a Domino, for example, we are the one of the global VC in the region, but I don't see the other VCs as competitor. We are all co-investors and we are all trying to create impact, and we need more. So this is our portfolio quickly. I will pass that time, these guys, and I will begin to the my investment education. So guys, I see that the audience is the more startups. So first in that here you will learn about some tips of the getting investment from my guys. How do I know? You can ask this question. First of all, I haven't been I'm not the founder before. I haven't managed any startup, but my experience came from we closed 120 investment rounds in 7-8 years. So I see that some mistakes happened and some good things happened. So generally, I collected all in my experience in that education. So that's why I'm giving it to you. So first, yes. So you need investment because you have some plans, you have some idea, but to make it happen, maybe you will go. There are some options, guys. Okay, so these options are, so basically you can go in the bank and take credit. You can sell your car. You can sell your father's home. You can sell your grandfather's home. You can sell anything and do that business. But think about it. These materials gives you just money. So the thing that you should raise from VC is, first, you're raising money, then you're raising the expertise, because that VC has experience in investing different startups, different sectors. So in emerging markets, I love one thing, that all VCs, take that carefully, all VCs are sector agnostic because there are not too much deal. So we're trying to invest best deals in every sector. That's why being a VC is like your domain expertise is not at the one place. You will have low expertise at any sector. So being a VC in emerging market like this. So for example, you can talk with the fintech 30 minutes. At 30 minutes, you can say, okay, Yagiz is a great guy. He knows fintech very well. But at 31st, you can say, okay, he's not know it very well. So the thing is, being a VC is like this. So that's why all emerging market experienced VCs can support you in your business. So that's why you should raise money from the VCs. And the biggest thing that go to VC, okay, you have idea, you have product, so you're at the seed and pre-seed area. So don't be ready to go to VC. This is pretty important. Everyone tells you that, okay, be a presentation, do this. So we are the guys that open, okay, to talk with anywhere with you. So from LinkedIn, you can text us, you can, send us email, you can text us from WhatsApp, whatever. As some VCs don't like it, but as a Yagiz, you can text me anywhere. Doesn't matter. From Instagram, from WhatsApp, this is my job to talk with you, to advise to you. Because even I don't invest in you in idea stage. You should come to me and talk. You should discuss the idea with me. So being a VC is, from my opinion, being an emerging VC. In developed markets, the behavior is different, maybe. It's different because when you're not at their stage, they don't care about it. So it's normal. But in being emerging market VCs, even if you're at idea stage, we talk with you, we support you. So there's no specific time to go to VC. Actually, there is. So if you're at the early stage, you can't go to seed stage VC. If you're a seed stage VC, you can't go to Series A VC. I don't tell that. So always, for example, at the reporting side, at any side, for example, to connect with the VC, there's no time. So send your reports. Even maybe 2 rounds after that, VC will invest in you. But that now send the reports, or send the quarterly report. Say hello. Take the idea. Send some pitch, and tell that, okay, I'm not at your stage, but let's talk. What do you think about it? This is pretty important for the investment round. So before going to VCS, if you have idea, just come and talk with us. If you have idea, go to customer first. From my opinion, go to your potential customer first, and act like you have a product. First, do your customer presentation, not your VC presentation. Prepare your customer presentation and go to the potential customer. Act like you have a product and try to sell it. Try to take the insights. So for the VC side, you should know that, yes, first, you should have an idea to go to them. You should ask them something. Sometimes I do some meetings, and at the end of the meeting, we don't raise money. This is just this. I say some ideas and they don't. It's like, if you go to VC, go with something, want something from us. Ask something from us. It's like, ask something, ask the product, ask the valuation, ask the what will I raise, how much should I raise, what do you think? So ask me to maybe connect you with other customers, ask me to connect you with my portfolio to do maybe POC and co-sell together. So every time you should go to VC. These are the stage I'm passing that area. So first, you should know that if you're newbie about this venture capital side, there are some investor types. If your idea and maybe very, very seed stage, you need to go to angels, because that angels, this is specific, that angels should be specifically, from my opinion, that your sector, that operating sector you do. If for example, you are doing some automotive tech, if you can add your cap table, one of the CEO of any company, of one of the advisor or board of director of any automotive company as an angel to your startup, it's an effect. It's great. So angel side is more high net worth individuals. I see that for example, in fund, we have some LPs. They invest in funds, but both they invest personally in startups. So this can be both. But from my opinion, very, very, very seed stage, pre-seed stage, you should go to investors, angel investors. It's pretty also good. So yes, I'm passing through, but as I mentioned from the last page, we should go to venture capital side more, because the thing is, you're not just raising the money, you're having expertise. So for the tour preparation, we have some tips. I have some, different tips for you, and it's like step by step. It's like take click. So first of all, I want you to focus on what do you want from us? Money, expertise. So decide how much will you raise. So for your product, before investment round, you should aware about your market, about your competitors, about your product. This product, market, and competitors. These guys create your presentation because first you should look the markets, how much features and which features my competitor using it. What is my features? So you should do your competitor analysis. Doing a competitor analysis is not just doing product analysis. The first thing that I do before any startup meeting, I check its competitor's CEO or founder's profile. Why? Because I want to understand the expertise. I want to understand, for example, if potential startup is meeting with me 15 minutes before, I check generally the CEO of their competitor, the board of director, investor of their competitor, because to understand the competitor of potential startup raised so 100 million US dollars. So that founder raised that money. So I just check and compare the experience. I check their first time profile, first time products. I check the websites. What are the differences? So some founders think that website is not important. Guys, it is the first thing that I open. This is first thing that I communicate with you because, okay, before meeting, I open your website. I see your product. I see your team. I see your mission, vision. I'll read your blog sometimes because blogs tell me that if you do good SEO or not. So there are too much tips that investors can learn from your website. So prepare your website well. Also, this is pretty important. So at the presentation, I'm going back to the competitor analysis side. So you will understand your market. In that deck, you will see your product feature, product line. So in that deck, you are telling me, okay, we are that team. So we have great experience. We are past ex Googler, ex Yandex, ex blah blah. So we are this university. We are that guys. 10 years experience in automotive, 5 years experience of clean technologies. Doesn't matter. So first tell the team. Then you go on with the product features, which features are pretty important, and especially your AI. So every deck includes AI right now. So if you are AI enabler or not, with one presentation or two presentation, you will tell how is your product at the AI side. You will tell us that. Then maybe market and the competitor analysis. Then at the end of the deck, you should tell me, okay, with that product, I did this. With that product, I went to that customers, I sold this much, your KPIs, and at the end of that presentation, you should show me that, okay, Yagiz, with my all alone or the past round, doesn't matter. Sometimes you invest at the second, third round. So maybe you did raise from the angels with 100K, with 200K, with a low amount of the money, or 1 million, doesn't matter. So with that budget, I created this and I do these numbers. Now I want you to invest that much and I will do this. So every presentation should be like this. Every presentation should meaning like this. I did this with that, generally budget or money, or without money, I spend my time. I did this. And dear investor, this is my next road. This is my next feature product role. This is my next KPIs that I reach. So give me this to do that. So this generally presentations include like this. Also financially, I see that generally when I ask the startups financials, they told me that okay, 1 week after we will send it. 2 weeks after, how did you present? How did you prepare that presentation? Without financials? Before, data room is pretty important, guys. The pitch deck is just the one piece of your data room. So before beginning to the round, you should prepare about your past financials, your past KPIs month by month. This is pretty important. Generally basic financials month by month. So then, again, we are coming to the same thing. I did this, and I will do this. So, at the deck, you should tell me, okay, I did this financials, and I will do that with your money, with others' money, with total that money, I will spend it. So always If you're raising 1,500,000, doesn't matter. You should create yourself a budget, guys. Also, I see some startups without budget. So you can tell me that 3 years after, my revenue will reach this. Guys, this is all, we know that this is all like, I don't want to say bullshit, but you understand me. So 3 years after, 5 years after, my revenue will be this. Okay, show me that number. It's okay for me. But I wonder, specifically, you should seek. If you put that 1 million I am seeking for, month by month also, you should show me that. Even if it does not happen, guys, if it's not actualized, I don't care. I want to see your plans. 3 months after, if you're at the, I mean, if you're at your budget just changed. 10K MRR, you get low, or you spend more, 15K more. I'm okay with this. This is startup. I accept that. But some startups don't do plan because they don't have a plan. So it is really, I mean, red flag for you. Even you should, I mean, doing any plan better than, I mean, making not making any plan. So do your own 1 year, 2 year plan month by month, even it's not actualized and happened, because it shows the VC that okay, you know your business, you know your sector. This is pretty important. So your presentation is ready, your past financials and KPIs are ready. You need to prepare your legal documents for the DD, so we will come there after, but you need to prepare your, I mean, generally your legal documents, maybe your, I mean, some, maybe some of the advisor notes you will take there. So some of the, I mean, generally at the DD side, you will do your tech paper. Maybe you will do your 2-page, 3-page. You just white paper about, I mean, generally about your product, tech paper about your product. Also do that. So you have presentation, past financial, forecast financial, past product features, future product features, KPIs, everything is ready. Okay. So you need to analyze that. You need to analyze that. Which investors can be my investor in the region? Or for the valuation also, the startups, I mean, I accept that. Okay, for the valuation, also you should say something. Because look at the global side, look at the same stage startups that raised in your country. Generally, look at the global, I mean, essays. So read it. Read it. So this is the thing that also for the valuation side, some of the, I mean, guys at the seed stage, they do some financials, they do some DCF. Also, I do M&A pastime, so I know what is DCF, but this is nonetheless for, this is nonsense for the startup side. So generally, from my opinion, valuation comes from the competitor and the market basis. And look at the same, for example, if you're any it can be any different sector. You don't have maybe the, I mean, any example for your sector, but look at the other sector, same SaaS startup, how much did they raise? So compare yourself, compare their revenue, compare your revenue, compare their team, compare yourself. So comparison models, from my opinion, generally these times every startup do that. So before raising, please go to generally do your own list. Okay, potential. So for example, in our portfolio, always we give that Excels. I give other investors Excel. I don't care about the GDP or anything. I give my portfolio the all VCs connections, guys, because my portfolio should raise money. And everybody does that. So use some tools. Okay, there are too much tools about having an email or connection, like for example, we use Apollo, we use Smart Reach, we use different ones. Also, at the end of the presentation, you can text me from LinkedIn. I can send you some tools that you can reach direct email. So prepare some list. Look at which VCs from the global side investing in emerging markets, guys. Also, I have that list. Every investor that invests in emerging markets, I have my own list. My team did that. I have all my deal list. So also I have some deal WhatsApp group, maybe 50 pages, 50 VC, 60 VC in that WhatsApp group. I send my deals. If I invest, if I give soft commitment, I support my portfolio or potential portfolio startup and send them. So do your own list, follow them. Okay. This is online. Sometimes, if it's physically, I can talk more reliefly. But when I talk with, I mean, online, I talk with carefully. So reach them. Okay, reach them out. Text them from LinkedIn. Text them from email. Even they don't answer. For example, in our one of our Uzbek founder that we will invest, we will declare that next month. Every day that he texted, every day he texted me. Believe me, I just died. So so because there was a potential. I love the founder. So the thing is, always push the investor, even when they say no, okay, stop, but add them to the report list. And after raising money next month, send update, guys. Send update. Sending update is easiest thing in the world. Do your list and send. Even they are not, I mean, in your stage, maybe two rounds after you will go to that investor profile. But before going there, send your reports. It's easy, so easy. So yeah, I told I told all of them, I guess, your market analysis and positioning, do your position and the market analysis, because to understand the trends of the market, trend features is pretty important. So check your competitors' feature roadmap, check your competitors' past features, because always trying to catch them. Sometimes I text the competitor growthers and I text them the feature profile to understand. So you need to be aware about your product and service strategy. So it is also pretty important. You should create in investor deck. You should create your own. I mean, the product market fit. How did you reach your market fit? How, or if you don't reach, how will you reach the your market fit? So it's also in the presentation. This is pretty important. So also this slide. Generally, founders don't put that, but growth strategy is pretty important. Growth strategy is pretty important. Believe me, in the presentation decks, this is my style. I check the team, then I go to the. I mean, when I look to deck, or when I sometimes VCs seeing too much startups in a day, in a week, in a month. So when I click your website, I could just 3 seconds, I understand what you do. But on the deck side, I check the team, then I check competitor analysis. I never look to market size. I check competitor analysis. I check how much money you seek. I check past cap table. I check if you have MRR, KPI, customer. Then I check what will you do. What will you do with the money that I give you? So also in the presentation, if you show that, okay, I'm gonna raise 1 million. In that million, particularly, you should explain me what is the growth and the marketing strategy for the market. This is pretty important, guys. What is your, I mean, I don't want to understand your customer acquisition cost because it will change. It will change. When your marketing budget rise, it will change. I don't care about your customer acquisition cost. If you have, I mean, if you have a past experience, if you told me that I burned to hell 2 million to the marketing, I want to check your customer acquisition cost. But in very seed stage and early stage, I don't look that. Just I want to see your plan, country by country. Sometimes in the presentations, I see that they just put country flag. I will go to UK. Okay, take your ticket and go. This is not the thing. So in UK, what is your strategy? Are you going to do co-sell? Are you going to go to resellers? Are you going to do SEO? There are 100 ways to open your business to UK or USA. And tell me why it is the fit market. Why US? I mean, I understand why US, but tell me what is your, I mean, the market, what are the, I mean, generally key points that you choose the US? Just, okay, the growth plan, US flag. Thank you so much, guys. So everybody do that. Don't do the presentation like everybody does that. So make it specific. Make it specific. Maybe some of them thinking, I mean, the people that listening me thinking that, okay, we have specific time. I see that you have specific time, but believe me, some points are pretty important. So when the VC open your deck or when they listen to you, they they are really careful about your, I mean, the points that I mentioned before. So yeah, your growth and scaling plan is pretty important. yeah, financial strategy also. So you should show me 5 years after. Please make me dream. Please make me dream. Like I know that you won't. I mean, maybe 1% of the startups just did their financial plan actualized. Believe me, but I know that you won't do that. But show me, make me dream. 5 years after, with your business model, with your features, with your AI backed, with your plan, make me dream that okay, this founders can reach that billion dollar company. So yeah, for the budget, in the that presentation, I always ask, with that budget, who is gonna hire first? Who is gonna hire first? This is also pretty important for me because it shows me that is your plan is certain, or what are the key obstacles in the team of yours. So that's why I'm asking that questions. For example, okay, that 1 million, you see that in your pocket in the bank. Everybody sent the money. So in 1 week, what will you do? Just don't tell me about the. I mean, yes, I will look the 1 year, 6 months plan. But first week, what will you do if you raise 1 million? Or, guys, this is so professional. Do that. If I be quit that fund management, I don't think so. If I be a founder one day, but I don't think so, I do that. Okay, guys. For example, if you have 200K, 250K budget for the team, okay, before the round, maybe in the specific round, try to catch that profiles, reach them. Reach as you will raise 1 million 1 month after I will hire you. So talk with them. Talk with your potential team also. Yeah. So yeah, marketing and growth strategy. I will pass that. So for example, exit strategy. So generally, it's like in our LP deck. Also, we have some exit strategy. But it's like exit strategy is nothing. But you can't tell me that. Okay, Yagiz, if I reach, so the exit path comes from sometimes with KPIs, sometimes with financials, sometimes with your data profiles, sometimes with your country that you operate. Because you're operating in one country, your biggest maybe competitor or the biggest giant want to come to that country and buy you. Sometimes exit happens suddenly. In our past four exits, we see, I mean, low exit numbers. We see also good numbers in 1 year. We sold our gaming company in 1 year. We sold our 3D to Zoometry. Zoometry is biggest Nasdaq-based company. We sold our company in 1 year. So the exit strategy changed, but also again make me dream. Tell me that okay, Yagiz, I will reach that numbers, then my biggest competitor will come and buy me because of my technology, because of the market that I operate, because of I will earn that specific customers, then they will come and buy me for my customer profile. So every exit happens with the reasons generally. Yes, this is a general word, but specific reasons. Specific reasons. So please make me dream. Think about what will I mean in this. Also, it shows me that. It shows me that. I mean, in the not it shows me that. I mean, in the agreements, I don't put that founder should exit with that because he said to me at the presentation. No, but every exit happens with some specific reason. So that's why you should make me dream. Also, you should make investor dream at that stage. So I already told about it. So short-term goals, long-term goals. You should have also in for 1 year. For 1 year, you should do monthly plan. So not, I mean, generally the every year, from my opinion, every year startups should raise. Every year. It's like 2 years, guys. Every year you should burn and raise, burn and raise. This is the cycle of the startups. This is how you get big. So in that presentations generally, you should have yes 5 years, maybe 10 years plans. But first, I specifically look. Again, I'm telling that the 1 million that you seek for in short term in 1 year, in runway, maybe you have 16 months, 12 months, or 13 months runway. It's okay. So I check again your monthly plan to see if that guy spending that money wisely or not. Again, I am telling it, even it is actualized. I am just looking to your, I mean, how wise that guy about its sectors. For example, if I know that in the any Central Asia founder, I know that some backend developer is good and the best backend developer, for example, um, 6,000 a month or 8,000 or doesn't matter, 10,000. If you put that 20, I said, okay, I invested before. I know that it's a 10, 5. Why did you text 20? But that kind of, it's a basic one, but that kind of things in the monthly plans we look for. So sometimes startups trying to do themselves positive in 1 year because of their scaling to, from the investor ask them, when will you get positive? When will you, cash positive? Guys, come on. So when will you cash positive? So in that time, I don't care about if you are cash positive or not. So that's why I co-invest, because strong cap table is pretty important in the emerging markets. Strong cap table is pretty important when your cash is burning and maybe you need after 2 months after you need money and your growth is perfect. Go back to your investors and take their money again and be in the round also. For example, this is specific. I love that case. Okay, you raise 200K from the investor, then you will raise 1 million, then you raise that 1 million super, and you have a 6 strong cap table, invest in your cap table, then you will raise 3 million. But that 3 million took 6 months, guys. Sometimes one investment round took 1 year. Sorely, we are from emerging market. Sorely, it took 1 year, 6 months. So the thing is, go back to your investor and tell, okay, I will raise 3 million. But now I need 1 million too. That process. So give me 1 million. So this is the KPIs. I'm going great. Support me, guys. So this kind of cases happen. So do that also. That's why we co-invest in the emerging market always. Also, strong capital is important for the startups and also for the VCs. So yeah, data room. These are some examples from data room. So one pager is pretty important. This is the actual case from the Lumion one pager. So sometimes I don't send DAX to other VCs. Sometimes I just send one pager. Okay, from the WhatsApp, for example, if you Lumion is the energy saving startup for the corporates and the industries. So when I send them to the any VC from WhatsApp, I send their one pager, and if they interest, I do intro. So that's why your one pager deck. Also, at your deck, you should do short deck, also long deck. Just don't begin with just one deck. You should short deck. You should create your short deck. Maybe, for example, in our first meetings, my team do. I don't do first meetings. Team does the first meetings. So you have 1 hour. Okay, start. We always give them 1 hour. So it's great time for my opinion. Maybe 40 minutes, 35 minutes. You talk and explain yourself. So for that time, you need more. Presentation, maybe long presentation, maybe 50 page, 40 page. But some VCs, this is decision. I can't say that. I can't say it's bad or not. From my side, every startup, they earn 1 hour in my heart. It's really important. I don't give them 30 minutes, but sometimes they do. So also you should have short presentation for the 30 minutes. This is decision. This is decision of the VC, sorely. And you should be aware and prepared for it. These are the samples I know. I'm going, quick. So these are the problem slides. If anyone can text me from Audi's, I can send that deck also. I'm super open for it. There's no confidential things I can send. So solutions, on the solution side, guys.
You can share it during the recording.
Yeah. So guys,
you can share it during the recording of the VC course.
Okay, super. So guys, for the solution side, sometimes, okay, but this is problem. This is so basic. You tell your problem, okay? In the market, There are some problems. That's why I do that. But on the solutions side, sometimes I see the icons and the word, icons and the word, icons and the word. I don't like it. This is my style. So believe me, this, I mean, how to raise money from VC, global VC presentation is change step by step. So change VC by VC, step by step, stage by stage, country by country even. So this is a perspective, the point of view. My point of view, I don't like to see econ word, econ word. Okay, this is my solution. This is econ and the word. I want to see your product. Solution is your product. Show me your features. Show me some, I mean, screens from your product. This is active wise and behave wise. With that slide, you show the VC that, guys, I'm not just no sense. I'm not the idea. There is a product, see it. So at the solution side, show some photo from the product. This is my, I mean, I love to see your product because even, again, the founders think that the UI UX is not important. This is bloody important, guys. This is really important. So I want to see your UI UX. I want to see your design at the product because also at the presentation, I want to see your design because it shows me your experience. It shows me your, I mean, how your eyes. It shows me that your eyes, your vision. It is pretty important to prepare, I mean, good quality of presentation. And there are too much tools, guys. Now there are too much tools. There are too much samples. I mean, as to your founder friends, even before beginning to that round, go to your friends of, I mean, the startup friends that raised money before, take their deck. Generally, these are the features. I'm okay with the icons in here. So in the solution, I want to see generally the product, but in the features, just text me the features. I want to read that. Okay. So yeah, these are, I mean, generally in the competitor analysis, in the right side, you see the diagnosis. I mean, the
diagram.
analysis. Yeah, diagram analysis. Also, this is my perspective. I don't like it because generally it's hard to put your. I mean, sometimes everyone shows themselves the best place. I mean, right and the top. Guys, it's like, I mean, it's left and the left and the bottom. So it's like, guys, in the generally in that here, I want to see your product feature differentiation. In your, I mean, in your product, if there's AI, if your competitor doesn't have AI, show me that I have that AI services. That's why I am different. Show me the, I mean, features. Show me the customer base. Show me something that you are different. But that's why I want to see that X and click competitor analysis more. I want to see that because I read that. Believe me, I go there and I read that. And competitor by competitor, I check that. I go their website, I check them. So it is pretty important. Yes. Generally, I want to see market analysis. Samsung also is very famous these days. Bot is okay because it's a 2 second. I looked at, believe me, if I mean I accept that if other VCs can check it, but I don't check the market size. So it's like, but you should show, but I don't check it. But it should be like maybe Samsung analysis. Maybe it should be like to show the investor that okay, your addressable market, then obtainable market. I mean, you should. I mean, first you should begin with the, I mean, general market. Then maybe you make it specific. So Samsung, that's why it's very effective because when I see Samsung, I check the, I mean, the generally what do they tax because of their specific. What's their specific market? Existing customer side also pretty important in the deck. You show trust to the investor. You show, I mean, you show some trust. Okay, guys, these are the logos of my, I mean, customers, and I have customer. You show that. This is also pretty important. This is also the target, and generally, what's your traction KPI slides are also financial slides are pretty important at the deck. Yeah, maybe you can put some testimonials from the customers. Also at the DD side, I mean, after AI, our technical DD costs are rising because everybody say that I am doing AI, so we should do some AI check on the startups. That's why our AI technical DD budget are raised a little bit. But as a DD side, I wanna talk with the customer. This is my best thing. I always want one or two customers to talk and discuss about the product. What do they like? I mean, what they didn't like? How was the process of buying it? What was the plans for? What was their expectations from the product? Did they achieve it? So I asked my team actually asked that question. And also sometimes I talk with the customer. I love it. This is my best thing to in that DD to check the customer idea about the product, actual customer idea of the product. Yeah, milestones are pretty important, guys. Also, you should do some historical and some feature milestones because also this is why prepare the deck. Again, I'm telling it. What we have achieved, and now what will I do? So this is pretty important for the decks. Yeah, if you have revenue, you should show some revenue generally in the tour. Yeah, post investment roadmap. This is also where I mentioned the growth side. What is your plans for the growth side? What will you do? What will your plans will do? Yeah, investment need is also pretty important at the site. Financial forecast. So when you raise money, how much will you reach? It's also pretty important. Yeah, 14 is pretty important also. Yes, kind of exit strategy is also important because as I mentioned, I'm passing this slides because I mentioned before. I want to see you wanna. I wanna make me dream. So I want to see the dream of you for the exits. So this is, for example, some budget and actual case for the exit. If anyone wanted from me, I can send. By the way, I can send that budget actual plans for month of month. What will I do for at the bottom of that Excel? By the way, there's EBITDA and the cash flow and the cash. So I see the expense and the cash and the EBITDA side in the bottom. I can send you that. These are also financial projection in here. If it's a SaaS business, also I see with the packages how much customer of they will earn. I also check that. What is their plan for the sub in the revenue model side? Yes, it's important, but the revenue model can change, guys. Revenue every 3 month revenue model can change because you can do also A/B tests. So I didn't see any startup that changed revenue model or pricing. So it will change. It will change. But also again in that plan, I see your packages at the SaaS business also. I see your packages, which features you put that, which package, would you sell it more? What's your plan for the corporates or individual side? So I want to see that plan also. Yeah, market analysis. Yeah, also scenario is pretty important at the seed round. You should explain your scenario for the investment round. Always you should push the investors. So these are the also investment scenario examples. So you should generally mentioned also about existing VCs in the presentation because also it creates trust. If you have some soft commitment, hard commitment, put it. Update the presentation. It is also pretty important. I want to see your actual cap table in the deck, and then maybe I ask that. Okay, guys, you raised money from that guys, 300K. What about this round? Will they invest again? Will they trust you? So that's why cap table is important, guys. Choose your VCs wisely. Choose your investors wisely. Your investors should support you at the next round, not just as money, with expertise. If you don't reach your investor in 1 week, 2 week, sorry, this is not a good decision. This is just a money decision. So want more support from your VC. Kill them. Kill your actual VC. Kill your potential VC. So from my opinion, founder, also the biggest problem I see in the Central Asia is burning money. So we invested Goda is from Kazakhstan. Yelno, great guy. Now he's in Korea. We invested Point AI from Uzbekistan. Now he's in US. He's doing great job in US. Now we are investing two more Central Asia startups, and also two more is hard commitment, and one of them we sent the money. We haven't declared that. Next month you will see two more investment from Central Asia in our portfolio. Two from Turkey will come. One of them is diaspora founder in US based. Also, hopefully, maybe one from Georgia will come. We gave soft comment. One from Kazakhstan also. So yeah, next in the summer it will be fast for us. So generally, the biggest mistake that Central Asian founders does this, they don't spend money. Because I see that in the founder profile, same in Turkey, sometimes I see that. They understand and they express that it's pretty hard to get money. So when they raise money, they don't want to spend it. They always, exclude the round. They always, exclude the round. So it's not good, guys. So burn the money. Begin your investment round before your money finish 6 months ago, 5 months ago. Your money finishing time. Your runway. If your runway is, the until the end of your runway month before go to back 5 months. Begin that time because it took 5 months, 6 months. So burn your money, guys. This is my but actually wisely. I don't say that just directly, but burn your money wisely because in Central Asia, for example, in our one founder from Central Asia, I always push him to burn money. You need to raise. So every week we talk that. This is our topic: burn money.
I think this is a legacy of post-Soviet Union. People are afraid to burn money in case they don't have it when they need it, right? So,
Yes.
Yagiz, I'm very sorry to interrupt you here. We are already far beyond our limit, and we have some good questions that I can ask from you, and also those are asked by our viewers. So I'm trying to combine the first one. So Domino positions itself as a digital-first and global from day one investor, and I tried to combine it with the question of Botagos Gabdulina. She's asking, like, can you also comment which financial metric, especially you look at financial models for idea and startups? So what are you assessing in a startup which is really ready to scale up? So looking at their pitch deck and listening to them, what you can you say right away that they're ready to go global? What are you looking to that?
At DEX financially, we look for MRR actually first. Everyone looks for MRR, guys. Everyone look for MRR. So, as in financials, I look sustainable revenue. So the startup model is, if you have a sustainable revenue, which means recurring and generally continuing revenue. So your marginal cost, if your marginal cost is zero, because you created your software and then you sell it, so you have just server cost, that's all. And generally OpEx, team, marketing, so I see that. But on the product side, you create that product and with zero marginal cost, you sell it to everyone. So first, yes, I look to MRR. I look if the startup can earn sustainable revenue for the next times. I look your monthly burn rate for the future. For the next 1 year, check your monthly burn because that show you have 10K MRR and 30K. Cash negative. Or 20K, 30K MRR, 10K burn. 10K expense. So it's like you're burning 20. You're earning. Sorry. For example, you have 30K MRR. So 10K expense. So you're earning 20K, but you raise money, and you're earning money also, but you raise money. So I want to see that you should burn more money. Maybe you should do more marketing. You should, just hire new team members. You should open yourself to new country. So I want to see that. Okay, 30K MRR is great. 10K expense. Okay, you're earning 20K every month. So earn low, guys, get big. So I look like
start
that.
Spending once again. Start spending.
Yeah. Then I check that also for this amount. Think about the other side. You're earning 10K MRR, 30K expense. So 20K you are burning. I check that. They can just reach that amount. With my money, how they can, with all the investors' money in the tour, in the round, how they can reach that? I don't want to I mean, make you cash positive, but I want you to reach that. I mean, that 30K. Maybe you will make 40K burn after round, but you will reach 30K MRR. So I check that numbers are pretty important for me. I look to your customer acquisition cost. If you are B2C, guys, this financial metrics change sector by sector, startup by startup. If you are B2C, I check customer acquisition cost, numbers, strategy, growth. If you are B2B also, I check the customer acquisition cost, but I check the sales cycle. I look to the sales cycle. This is pretty important because the biggest problem in emerging markets are, sorry corporates, but the corporates are not working with startups too much and very well. They're not used to work with the startups because they don't buy startup. So that's why I push you to be global. That's why I push you to be, sell your product to corporates. I love corporates. So sorry for that. But generally, the culture of the emerging markets, surely we have some 5 years, 10 years, 15 years time to collaborate with the corporates and the startups. That's why I check sales cycle. I check too my for it now. So also you asked me about global. I forgot that, man. I'll back.
Yeah. So basically, you answered my question. What you're looking at when you're trying to go global, and the next question actually I have from Alikhan Zurubai. Maybe this is the first question was asked because a lot of Kazakhstani startups are already developed regionally here and trying to go global. So your answer was very useful. The second is also to another category of our young entrepreneurs. So Alikhan Zurubai is asking, could I raise a very small amount of capital, say up to 5K? $5,000 from an angel invest, or should I just bootstrap? I need this initial capital to build my MVP and attract first customers to check traction. So we're talking about
who was the name of that questionnaire?
Alikhan Zarubai.
Alihan. Again, it changed. If you have money, I don't say burn all of them, but if to create the product in the world, in anywhere, you should create your product by your own. Generally, 95%, 90% of the founders are creating its product by their own, with their own money, own time, with own team. You don't need the money to create product. If you need the money to create the product, think again. You have to, guys, first, you are the business co-founder, okay? Go and, find some technical guys. Give them shares. Also, this is really important for me. I check this also. Because if you can't convince your co-founder, you can't convince me. First, go convince your technical co-founder as a business guy, and then do the product. Make them to do. Prepare your business side. And also, if you are tech product or tech founder, go and convince that business co-founder. Be together. So create the product, then go to angels. Yes, you can go to angels. Don't spend your time on your money too much. Going to angels, VCs again, I'm telling that it's not about money. It's all about to create, to have their opinion, to have, for example, angels can tell you, guys, I can't invest in you, but if you reach 5K, if you sell that product to that customer, I can invest maybe. So try to catch that point.
They want to see your commitment as well, right?
Yeah.
That you believe in your product. Good. So, Yagiz, one more last question. So I'm combining once again the question from our team and the question from Alexander Yezhelov. So our question was, they both about new technologies, cutting edge technology. So we know that Domino, mentions that leverages a data-driven AI-supported approach. So we'd like to know, maybe you can share, slightly about your experience, how you do it in practice. And Alexander is asking, please just give a basic, your basic opinion on Web3 technologies, Web3 startups. What do you think about them? So let's talk about this. And
I didn't hear your second question, but I will answer first. Then I can hear.
Okay, go
first. So, past 2 years, 1.5 years. So we, do our all data in the systems, and we use Google, Microsoft, different kind of tools to save our data. But this time with the different startups. Also, two of them is our portfolio startups. Now we are creating some tools. For example, we use some tools to generally find new startups first. If you are, for example, we have some LinkedIn tool, we have some AI tool to find you. If you are any Central Asian founder from grade, the high school, then if you go to US, okay, if you educate in Harvard, MIT, if you text yourself co-founder, we find you. Our AI and the data tool will find you. So if you're, again, we take some high school names from Kazakhstan. Also, I learned some good high schools in Uzbekistan. I learned some good high schools. So we have some, the data also on LinkedIn and to reach the US-based diaspora founders in US, UK, to Kazakhs who lives in US, UK. So I check them. Generally, in our data, when we invest one startup, we prepare memorandum, guys. So when we invest in startup in the Netherlands fund, everything is too clear. We do KYC, we have some investment process, we have memorandum 6-page, 7-page. In that 6-7 page, I explain myself why I did invest in you. So in that process, so I give it to the data and AI. If we invest in any sector, in the next startup, we see that if the KPIs are matching, why we invest in that area. It shows us why should we invest in that area. That kind of AI tools and data we use in our portfolio companies or also in our decision maker side. Even if we don't invest any startup, we save it. And why we don't invest, we quickly reach it in that sectors. It shows me that why Domino don't invest in that sectors, why we invest in that sector. So also we check the startup KPIs on that with that approach. Yes, it's my answer. And second question, Albek, please, if you can ask me again.
Okay. Yeah. One more question about cutting edge technologies. The second part. Yeah. So Alexander Yezhilov is asking your opinion on Web3 startups.
Okay, super quick.
Web3, yeah. So this is the last question, and after that, I'm letting you go finally.
Okay, guys. This is honest words. 2 years ago, 3 years ago, Web3 is not new. Everybody should know that. Instagram is also Web3. So in Web3, 3 years ago, it was a booming and it was fancy. Then maybe we look to Web3 startups, also B2B Web3 startups. Never invest in B2C Web3 startups. We have one investment in the Web3. They're also going well because they're B2B Web3 startup. They're not just Web3. Also, they are doing digital twin startup. Also, they are doing some AI, and they're using AI. They are doing some digital twins, and they are using data. So they're not just Web3 startup, but a little bit, maybe 20% they are Web3. So the fancy times of Web3 is finished. The time will come again, from my opinion, next 5 years, 10 years. But if you do something about Web3, don't do that at B2C. It's pretty, hard. Too much money in VCs and the founders burn on it. But the world, from my opinion, hasn't came that stage yet. Step by step, maybe AR and VR gaming will come to that stage. Then the generation will change. So we need more new generation for the Web3 side on the B2C. But B2B side, there are some good products. This is my opinion.
All in good time, you say, my friend.
Yeah.
Yeah. So let me sum up a little bit. Yagiz, you basically gave us VC really rushing bootcamp 101. So once again, dear audience, I'm notifying you that soon we'll be launching our VC online course, and Yagiz will be one of the our leading speakers as well. So stay tuned up for our updates. Yagiz, thank you once again. Wishing you all the best. Safe trip to Bishkek, and hopefully to see you in 1.5 months in Almaty. So these are our partners from Domino Ventures Turkey. My name is Ali Bek, and B Global Ventures is continuing VC Talks next month.
Super.
Have a great week, everybody. Goodbye.